Gold prices are down around 8% from peak to bottom. Meanwhile, the geopolitical escalations are still rising. And it's not only about gold, it's about almost everything. But the question here is that if the geopolitical escalations are still rising, then why gold is not moving higher with them? Why gold is not already trading near the previous all-time highs? Many traders have been wondering recently about this question, and let me answer this. To answer this question, we have to go a little bit in the past. Right now, we are on April 2nd, 2025, where first the trade war started. And we can see that trade war is generally a panic, a fear, a type of uncertainty. And any type of uncertainty, generally speaking, is bullish for gold. But when the trade war first started, instead of moving higher, gold prices fell down before stabilizing and making some new all-time highs later on. We can see same type of pattern in SPX as well. When first the trade war was announced, it fell down before stabilizing and making some new all-time highs, higher lows. But again, there is the same question that why, when the first time uncertainty hit the markets about the trade war, why gold did not move higher? Why gold fell down first before moving higher? And the answer to this is very simple. See, the hedge funds, the institutions, market participants, investor firms, all of them, they have their capital allocated to all types of market. They don't only trade gold, they trade the indexes, they invest in the indexes, in the stock market, in metals, in forex, and all of that stuff. When a sudden uncertainty, a sudden panic hits the market, global stock market or all type of risk on assets, they start to fall down, and investors start to occur some losses in their investments with risk on assets, with the stock market, individual stocks, and all of that stuff. Now, investors here want to do two things. The first is that they want to cover these losses which they start to face in the indexes, in the stock market, or with the risk on assets. And the second thing is that which they want to do is to raise cash. Why? So they can eventually buy those dips in the risk on assets when things start to stabilize later. They want to do these two things. And how they can actually do this? They can do this by selling their winning assets like gold. That is why whenever a sudden uncertainty hits the market, instead of initially moving higher, gold falls down because of some profit taking by the hedge funds, by the market participants. And when the things start to stabilize, gold starts to move higher as well by pricing in that uncertainty and all of that stuff. This is exactly what is happening right now with gold. This is exactly why gold is moving down. Now, here one more important thing which I want to show is that this is the performance of the stock market, of the global stock markets, since that event started in the Middle East. We can see South Korea down around 8%, Japan and South Africa down around 6%, Germany and Spain down around 5%, and so on. So one thing is clear, that investors, market participants, hedge funds, those who invested in these global stock market, they are facing some losses. And eventually, to cover those losses and to raise cash as well, they are selling their winning asset like gold. That is why gold is moving lower. Now, coming down to the second question, that when gold will start moving higher, or when gold will start properly pricing in all of this conflict, all of this uncertainty. Now, the thing is that when you see on the daily time frame, like talking purely from a structure perspective, from a higher time frame structure perspective, from a price action perspective, we can clearly see that on the higher time frame, from a price action perspective, gold remains bullish with continued higher highs, higher lows formation. If we come down to our MRKT AI terminal, here we can also see that on the intraday time frame and on the higher time frame, gold remains bullish. If we see our macro factors, for the swing trading higher time frame, we can see that multiple factors or majority of the factors remain bullish. At along with, like, it's not only about the geopolitical tensions, it's about positioning as well, the long term positioning. Central banks are still recording are still buying gold at a very aggressive pace. Countries like China and India, they are stockpiling gold at an aggressive pace, so the demand is still there. The higher time frame structure is still aggressively bullish, or the macro positioning is still bullish for gold, and the macro fundamental picture also remains bullish for gold. This is only a short term profit taking, a short term correction, because of investors selling their winning asset to raise some cash to cover their losses in other assets. Overall, as I told you just now, that from a long term perspective, again, the structure remains bullish on gold, the macro picture remains bullish on gold, and the positioning remains bullish on gold as well. Don't let this short term correction fool you around, because if it does, if you actually get fooled by it and start to sell gold, you can face some losses. Okay, so I remain bullish on gold, but not at the current levels, not in the midway of this range of this correction or something like that. I need to see a shift in the structure before buying gold, or else in other case I need to see some discounted prices. I have my two BOIs. If we see a break and hold above 5200, 5220, something like that, if we start to see a break and hold above this, then this will be a shift in structure for me, and here I will eventually look to buy gold. Okay, depends, obviously at that time it will depend on the fundamental factors available at that time, but as speaking as of now, if the current fundamental picture remains the same, then I will look to buy gold above 5200s, 5220s. Okay, and in other case, if we fail to hold above this area and start to move down again, or maybe even we don't test this area and start to move down from here, then I will be looking for more discounted prices around the 4880s. If we go on the daily time frame, we can see that this is going to be a very beautiful demand zone. We had a consolidation around here before gold broke out of this consolidation and started to move higher, also pricing in that Middle East conflict for the short term. So these are the lows of that consolidation, and this is a very beautiful demand zone. So if we get discounted prices around this area, around the 48 it is, then I will start to look for buys. Now quickly talking a little bit about the US indexes as well. In the short term, to be very fair, I am bearish on them, and it's not only about you can say the geopolitical tensions. There is a lot of stuff. Rate cut bets have been reduced due to rising oil prices, due to rising inflation expectations. There are reduced rate cut expectations now. This is the one thing. The second thing is that we have geopolitical tensions, but at the same time we have trade policy uncertainty as well. Before the geopolitical tensions, we started to see some trade policy uncertainty, and at the same time retail investors have been continuously buying the or we are seeing some continued inflows from the retail investors and the US indexes. Meanwhile, if we see the higher time frame, we are not seeing that conviction, specifically speaking, from the SPX to the upside. We go again and again to test these previous all-time highs, but we have failed multiple times to break higher. So we are not seeing the conviction. The short-term fundamental factors are looking bearish with the geopolitical escalations, trade policy uncertainty, and all of that stuff. So in the short term, I am bearish on them, and I am looking for some sell positions around the 6830s or even higher around 6900s, or even at the highs of this consolidation at the 7000 round levels. So my positioning is very simple. I am bearish on the US indexes for the short term, not for the long term. Okay, I'm not calling for a crash for something like that. If that happens, I will welcome this as a dip buying opportunity. But in the short term, I'm not calling for a big crash like 10 to 15% correction, something like that. I'm calling for a short term profit taking, short term continued downside on the US indexes. And I am right now bullish on gold. But when you talk about from a price action type of perspective, I am a little bit sidelined. I am waiting for two things which I told you earlier. I'm waiting for a shift in the structure, or I am waiting for more discounted prices. So this was supposed to be a quick analysis video, a quick update about the markets, about my positioning and all of that stuff. So I guess this was pretty much it. If you have any questions, you can ask in the comment section. And if you want regular updates, macro updates, trade ideas, and all of that stuff, I will drop the link of my public Telegram in the description, and my other social media accounts as well. If you want, you can check them out and you can join them as well. So yeah, this was pretty much it. Make sure that you stay vigilant and you keep an eye on the headlines as well. If look out for any type of de-escalation headlines and like stuff like this. Okay, so yeah, this was pretty much it. Best of luck for rest of the trading week.